while we wait, just thinking about our theme for the GCA, disruptions. Do we all like disruptions? Disruption or change can come into our lives either as a result of a crisis or as a result of choice or just by chance. In either situation, we are all faced with having to make a choice. Do we make the change or not? If we ignore or hide away from the challenge of change, don't we deny ourselves the opportunity to learn, the opportunity to grow? Because not all storms come to disrupt your life. Some storms do come to clear your paths. We all know the famous case of Nokia, right? How Nokia lost its market share. Snapdeal is another such example. It was a leading e-commerce platform in 2014 in the Indian market. When Amazon entered India, within a very few years, Snapdeal started losing its market share to Amazon. Why? Because of the redundant competencies and not catering to their customer needs. While Amazon worked on improving operating efficiencies with development of the Amazon Prime, we all know about the one-day delivery, and launching its own wallet, which is the Amazon Pay, Snapdeal, on the other hand, it failed to look at its customer, which was a large part of our discussion yesterday. Customer is king and has to be at the center of our decision making. So we also face disruptions in the Indian insurance industry, and the actuary is almost certainly in the thick of most of these changes and battling the interests of various stakeholders. We had a lot of sessions yesterday on disruptions, and please do stay tuned today as well, because disruptions will be a core theme of many discussions today.
Now, before we proceed forward, let us invoke the blessings of Goddess Saraswati, the embodiment of knowledge, wisdom, and the art through Saraswati Vandana. Can I have the Saraswati Vandana on the stage, please? What a divine way to start. Good morning, everyone, and welcome to the day 2 of GCA. We had a fantastic day 1 where we'll delve into our key theme, data, disruption, and the actuary. And today's day looks more promising. We have a lot of speakers. These are one of the big names from the various industries and the professions that we have, and they will share their thoughts through panel discussions on the key theme. Some of the areas that will get discussed today is in the areas of health insurance, navigating in the global actuarial fields, the technological disruption that is in the banking world and how it's going to impact risk underwriters. There is a white paper launch, and there would be discussion on the insurtech domain. And lastly, there would be a discussion on the investment lessons being learned from the history. One topical question on the CPD. I'll say CPD will open at around 4:30, and everyone who wishes to get a CPD will have to click on the QR code, which will be kept next to the May I Help counter. And once you check in, the CPD will get automatically credited to your account. But the CPD will open at 4:30 in the evening. With that, can I welcome our President, Mr. R. Arunachalam, to please come up and give the welcome address.
Good morning, all of you. Thank you. After a long day yesterday, and you know, a lot of our guests have been traveling from out of the country, and also Bombay, traffic, we are starting pretty early, so I thought I'll check the vibrance by saying, looking forward to yours. Good morning, all of you. Thank you. Chairman IFSCA, Shri Rajaraman ji, CEO National Health Authority, Madam Deepti Gaur ji, Director National Insurance Academy, Tarun Agarwal ji, Presidents of the associations, my peer associations, the global bodies, distinguished speakers, guests, my dear members, ladies and gentlemen. A very good morning and very warm welcome to all of you for the second day of the 23rd Global Conference of Actuaries. We had a packed day yesterday. An array of eminent speakers, starting with Secretary, Department of Financial Services, Dr. Joshi Saab, and Chairman IRDA, Mr. Panda. The Secretary talked about how actuaries have a lot of wider opportunities in the current context, especially in the Amrit Kal, in the insurance and the banking sectors. He also stressed the importance of research, innovation, and underscored the significance of India becoming a talent hub for actuaries, both for the domestic market as well as for the international markets. Chairman Panda, as usual in his dynamic address, spoke how the technology-driven transformation is occurring in the industry and how and why the one-size-fits-all approach is not working in India anymore. He also explained his vision of insurance for all by 2047 and how actuaries' role is crucial in achieving that vision. Mr. Kamesh Goyal, our visionary leader and speaker, talked about moving beyond the past and how actuaries should look at the data, the leading and the lagging indicators, and the importance of allocating sufficient time and effort in creating solutions which are qualitative in nature and should address the needs of customers. We had Mr. Mohanty, Chairman LIC, who emphasized the significance of actuaries in his own style. And he called for a fresh approach, focusing on identifying the solutions and embarking on an action-oriented journey for the future. Amit Jingran, CEO, SBI Life touched on the topic of customer centricity and need-based selling. Sarvesh Singh talked about the disruptions. And Mr. Danesh Dilkush from Microsoft talked about, in fact, had a jugalbandi with our own Abhay Tiwari. Amit Kalra and Rajesh Dalmia talked about actuaries and the global capacity. We had further concurrent sessions. About 50 plus speakers, I guess. Very, very packed schedule. And thanks to all of you, I mean, we could run it in time, and we had a wonderful discussion and exchange of idea. Friends, today is another packed day of eminent speakers, starting with Chairman IFSCA, Sri Rajaraman C. And then we also have the CEO of NHA, Ms. Deepthi Gaur Mukherjee, coming over here. After that, in the afternoon, I guess, we have a panel discussion with Tarun Agarwal ji on the banking side. So it's a packed schedule. I don't want to take a lot of your time. I just want to say two things before I conclude. In the last year, we have had two important MOUs signed. One is with IFSCA, the gift city, and the chairman has kindly allowed us and consented for having an MOU of understanding with them. The terms include promotion of gift city as a global actuarial hub, collaboration and cooperation of services involving actuarial techniques and data science tools, organizing international and domestic conferences and seminars in the gift city, and disseminating relevant information and knowledge among the members who are residing overseas. And also there are other items as well. We work closely together on promoting gift city in the lines of other major cities like London, Singapore, Hong Kong. We also have an MOU signed with National Health Authority, the body which drives the Ayushman Bharat for India. The MOU is about developing a pricing framework for Ayushman Bharat. Of course, this is starting small for a specific number of states as per the requirements of NHA. We would work on improving on that framework. With this, I thought I'll just conclude, given that we have a packed schedule. Please feel free to share your thoughts, debate matters, and enjoy the conference. Thank you so much.
Arun, kindly wait. Can I please invite chief guest for the day, Mr. K. Rajaraman, on the stage, please? Can I have a round of applause for him? Mr. K. Rajaraman, he is the current chairman for the International Financial Services Centers Authority. He's an IS with over 35 years of experience and has, through various leading roles, he's led as Secretary of the Government of India in the Department of Telecommunications. We'll request the sir to please give the keynote address.
First of all, a very warm good morning to all of you. It's indeed a pleasure to be part of this gathering to talk about a few things that might be of interest to you. I, first of all, would like to thank Mr. Arunachalam and his team for having invited me to this global conference of actuaries, which has been organized by the Institute of Actuaries of India. So from the agenda, I gathered that we had a very wide-ranging set of topics for discussion, including those which probably look at the future, I think, in terms of the cutting-edge technologies that are around the corner, which probably cut across all sectors, I think. It's just not the insurance sector or the actuarial science, but also cuts across every other sector, sector of importance or value, I think. So technology today is the underlying, or rather has become a foundation for innovation and growth, and to solve some of the unsolved problems of this planet. So at the outset, I would like to very briefly tell about India, which is very important, I think, because all of us, I think, IAI and all of you are largely from the Indian soil, and therefore, I think it's very important to understand how India is a country, I think, which is at the cusp of a very important disruptive growth, is shaping up. All of you are aware that over the last 75 years, we have made a lot of progress. So India has celebrated its 75th year, or Amrit Kal, last year. And it was a great opportunity for all of us to actually review what has happened across the country, across sectors, and also within our own domains, I think, as to where we have, what we have achieved and where we need to go. So while all that was happening, I think the Honorable Prime Minister also announced the intention, the national goal of making India a developed country by 2047. A very daunting task, and has launched a campaign and a movement, perhaps we can call that, I think, and I'm sure that it will be followed up by systemic reforms, which probably are just a few months away. So under the banner of Vikasit Bharat 2047, or Developed India 2047, I think a lot of programming is happening, a lot of thought process is happening now. I think, in fact, the Prime Minister himself, while addressing a session a few days back, mentioned that he has received about 12 lakh suggestions, and nearly about 1.2 million suggestions from all across India, and maybe from abroad as well, through the Vikasit Bharat platform. So I think this idea has excited India, and especially since we are 1.3 billion strong, I think it requires a lot of thought, planning, coordination, and participation. So if you look at the last 10 years, a lot of very deep reforms have happened in the financial sector, from which the actuarial sector also belongs. So the growth that has happened, I think there are a lot of reforms which have happened in the financial sector, which includes banking reforms, insurance reforms, reforms in the capital markets, and very fundamental reforms which include financial inclusion reforms. So I would like to touch upon the financial inclusion reforms, because I think of all the reforms which have been done, which include GST, corporate tax reductions, the simplification of the various regulations, all this have actually played a very important role in actually creating investor confidence, creating a new wave of energy and dynamism in this market. But while that be so, I think I consider the financial inclusion reform as the most significant, because in the last 75 years, or rather 70 years, I would say that nearly about 500 or maybe 600 million people were out of the formal economy, I think, in the sense that most of them did not have a bank account, they did not have an insurance account, they did not have a pension account, and whatnot. So therefore, once you are not connected to the formal system, you lose virtually all the benefits that accrue because of the formal ecosystem. You are not in the payments ecosystem, you are not there in maybe even health, perhaps, health insurance also, because of the fact that you're excluded. But thanks to the digital infrastructure has been put in place in the form of Aadhaar, which is a biometric ID, mobile phones with nearly about 1.3 billion people, and the historic program of Jan Dhan Yojana, which means providing bank accounts to, as of today, I think about 514 million people who never had bank accounts even prior to independence, today have bank accounts. And out of these 514 million people who have provided banking accounts over the last 5 years are now receiving bank credit as part of the programs. Whether it be the street vendor support program or a fisherman's program or a Mudra, which is a SME-based program, all of them are receiving benefits under this scheme. So today, I think very soon, I think, as Mr. Panda, the IRDA chairman mentioned, I think insurance for all will is going to be a priority very soon, I think. Once that is done, I think, using this digital platform, maybe these 514 million people will come on board the insurance sector, I think, which is going to be a huge leap of social security. A lot of them are now into the micro pension schemes such as Atal Pension Yojana. I think I'm sure this number is going to multiply by a few, by adding a few zeros. And I'm sure that all this, the fundamental point that I want to make is that today, therefore, the bottom of the pyramid, which was disconnected from the rest of the country, is now part of the mainstream economic growth, which means that now the benefits are already there. Like for instance, if you look at the banking accounts of these 514 million people, they have saved nearly about 2 lakh crores, which is probably something like $70 billion. I think their savings is as high as that. So this transformation, I'm sorry, about $30 billion. So this is just the tip of the iceberg. So very soon you will find that many of them, this has already been seen in the capital markets. Just about 5-6 years back, the number of people who had demat accounts was just about less than maybe a few millions. Today, nearly about 80 million people have demat accounts. So they are invested in the capital markets. So you will find that all those people, and not only that, with improvements in technology such as tokenization, fractionalization, etc., the financial inclusion in the capital markets is happening shortly, I think, in the sense that more and more small, the lower middle class, the people who are just in the middle class can also start investing in capital markets, saving, pensioning, and so on and so forth. So this bottom of the pyramid, consisting of these 500-600 million people, are going to drive the growth over the next 25 years. That is the kind of the growth that would happen. And this will be a phenomenal growth in the sense that I think the scale of growth it will be difficult for us to actually to kind of predict, what kind of contribution they would make. So the short point is that we are going to have tremendous capital generation within this country. I think it is just not, we will be perennially dependent upon foreign capital for development. We will be dependent, definitely. But I think there will be a lot of capital generation because of the participation of the bottom of the pyramid in the financial ecosystem. So while that be so, I think one of the very important elements, I think there are a number of elements in this toolkit, I think of the government of India. While we look at financial sector growth, we look at sectoral reforms, we also look at social welfare policies, which include financial inclusion, and so on and so forth. While all that will probably see substantial reform over the next year or so, we also, one of the toolkits that's very important is that while the reform in India takes place, India is a democratic country. I think we are incredibly proud of that. So a democracy actually takes a lot of time to reform. And I think you all have seen that, I think to make things happen, it has taken an incredible amount of time, consensus building, and so on and so forth. So therefore, the reforms that are going to happen will require tremendous amount of consensus. So it will take time. While that be so, the Honorable Prime Minister was of the vision that perhaps we must set up an offshore platform which is actually aligned with the rest of the developed jurisdictions. So that gave birth to the idea of GIFT International Financial Services Center, because India's reforms plan will take time and it will be on a linear trajectory. So, and sometimes perhaps disruptive, as happened in our digital sector. But while that be so, I think there is a need for a very fast regulation in an offshore enclave called the GIFT IFSCA, where we have actually aligned tax and policies and regulations with the rest of the world. I think, as Mr. Arunachalam mentioned, benchmark to Singapore, Dubai, London, and others. So we are constantly innovating. So the idea is that to provide, there are many investors who are already in India. They have understood, what it takes to invest here. But there are many investors who have not come here, I think. For them, I think perhaps GIFT IFSCA is a soft landing pad which provides them the comfort of globally aligned regulations. So we have, in the GIFT IFSCA, which is actually a city which is in the city of Gandhinagar, which is in the west of India. So some of you have visited it. I think I would request that maybe some of you who haven't been there, I think may, for your business purposes, also look at GIFT IFSCA. So this jurisdiction is a jurisdiction which where only foreign exchange is transacted. There is no Indian rupee transaction. It is completely a foreign territory as per the Foreign Exchange Management Act of India. It is a tax resident. Tax is exempt for a period of 10 years out of any of the 15 years. I mean, GST, the commodity transaction tax, security transaction tax, etc. is exempted. So a lot of policy carve-outs have been done to enable foreign companies to find themselves at comfort. Now coming back to, therefore, I think I come from. I'm part of the regulator, which regulates that market, a small but a growing market, which looks at creating a special pipeline for such kind of investors who would want to have globally aligned regulations. The GIFT City today has seen substantial progress, and I think we have about 26 banks, out of which about 10 are foreign banks. We have 83 fund managers. There are about 105 alternate investment funds which has been registered in GIFT City, about 8 insurance companies, and 28 aircraft leasing companies. I think there are about 8 ship leasing companies. So there are 2 universities foreign universities who have launched their programs out of GIFT City. So there are a variety of activities which are happening in GIFT City, and there is a capital market with 2 exchanges. I think there is a stock exchange, and there is also a bullion spot market exchange. So we have a full-fledged capital market ecosystem comprising of intermediaries, the clearing corporations, and so on and so forth, settlement systems, and so on and so forth. We recently launched a payment services regulation as well, enabling instant payment settlements also to be possible in GIFT City. Now, coming back to the theme of this conference, I think let me state that the actuaries play a very important role in the insurance sector. I think it's very important today, with the increasing amount of risks which are seen in the global landscape, especially in the financial sector. I think actual science is now more important than ever in enabling greater financial stability in the financial sector, and ensuring that financial decisions and business decisions have risks which are under control and understood well. So the most significant contribution of actuaries to regulatory reform is their ability to provide quantitative and qualitative assessments of financial risks. For instance, in the insurance sector, actuaries use sophisticated business models to business and models which cut across several sectors to estimate future liabilities and capital requirements under various scenarios. This data-driven approach informs regulators and policymakers, enabling us to establish solvency standards that ensure that insurers can meet their long-term commitments to policyholders. The adoption of risk-based solvency regimes such as Solvency II in Europe requires insurers to hold capital proportional to the risks they underwrite. And this is a testament to the actuaries' influence in aligning regulatory practices with the principles of sustainable growth. We in IFSCA are also moving towards, along with IRDA, to a risk-based capital and risk-based supervision approach. So in this landscape, I think we also, while actuarial science is pretty old, I think, technology has added a further layer to this entire thing, as I already mentioned. So we have new companies, new age companies, which actually use technology to mitigate risks, to enable greater ease of doing business, to enable customer convenience, and so on and so forth. So today we have a very vibrant insurtech sector, which actually has experienced very significant growth, revolutionizing the traditional landscape of the insurance industry through integration of technology and a variety of other sciences. So if you look at the insurtech sector, the global sector is expected to reach nearly about $14 billion in 2023, and is expected to grow very fast at a rate of almost like 30% per annum. So this underscores the need for using technology for driving innovation within the insurance industry, using technologies such as AI, blockchain, big data, analytics, etc., etc. So along with that, technologies such as IoT, the machine learning, etc., also have added value to the insurance ecosystem. So actuaries who are regarded as data scientists have been pivotal in integrating analytics and technological innovations into the industry. So their expertise in risk management and predictive modeling have laid the foundation for the sector's evolution. So I'm given to understand that the actuarial curriculum has recently been updated to train students in these very special fields. So I congratulate the Institute of Actuaries who are always at the wanting to stay at the forefront of and the cutting edge of technology. So I also see an opportunity for maybe actuarial scientists to also launch insurtech companies. They need not be just passive providers of actuarial services, but some of them who are game enough can actually launch very innovative insurtech solutions for the market. This is a great opportunity, and we in IFSC have a very solid fintech practice, and we have a fintech regulation. We encourage actuaries who have the capability to launch innovative solutions to visit GIFT City and also to look at launching global solutions out of GIFT City. Today we are also beset by the problem of climate change, and this has had far-reaching effects on our world today, which cannot be emphasized enough. We have seen that many jurisdictions where property and casualty insurance is now a very difficult proposition. I think they say that some parts of the world, or some sectors have become uninsurable, I think, to say the least. People are balking at underwriting such kind of risks. So the unprecedented threats proposed by climate change to the global economy, natural ecosystems, and communities demand a robust response from the financial sector industry. So while the COP28 and others are grappling with these processes, it is very important for us also to look at how we may do business in this uncertain world. I think so. That's very, very important. I'm sure that a lot of development has happened. So Swiss Re, which has reported the economic losses from climate-related natural disasters, has reached about $166 billion in 2021, with a significant chunk attributed to weather-induced events. This alarming trend underscores the growing impact of climate change on economic security. Actuaries are very crucial to steering this financial sector towards sustainability. So we have just in IFSC formed a group which will look at cat bonds, ILS, and many other kinds of instruments which probably can be developed in a very climate sensitive way to support the process of ensuring that we will continue to do insurance in this volatile and uncertain world. So sustainable financing is something which offers a promising solution to the impending crisis. And while we have sustainable insurance, sustainable credit, and all these kind of products which are appearing in this market, it's very important that the risks are understood properly and mitigated appropriately. So this, the actuarial sciences, scientists now therefore have an enlarged role, obviously, in such a situation. Obviously, when you want to analyze these risks, I think it calls for a greater amount of expertise which probably cuts across many other sectors. So things like climate scenario analysis, so on modeling the impacts of climate change, I think as time passes, is something which is very important from the insurance sector viewpoint. So testing an organization's resilience against extreme weather events or government policy changes, etc., are very, very crucial. Quantification of a company's carbon footprint is something which also is very, very important from a new age perspective. Then we also have alternate investments, where actuaries can evaluate the investments such as climate derivatives, which may hedge against government changes in government policy or extreme weather events, etc., etc. Analysis and prediction using regression analysis to study relationship between variables such as temperature and precipitation, remote sensing. So all these kinds of data require a new level of competence, or probably even a coordinated effort, I think. Actuaries have to form consortia of scientists who actually provide domain expertise on all these verticals and work together to deliver solutions for the financial sector, which make sense and which are probably more robust and more acceptable. So similarly, I think banks also have been pioneers in embracing technological advancements, especially in the realm of data science. So here, I think the actuarial science can play a very important role in tackling complex issues such as fraud detection, credit scoring, personalized banking services, etc. So wherever data exists, I think the actuarial science can come into play in kind of identifying risks and modeling. How risk can be mitigated. So therefore, I think it's the actual science need not be necessarily an insurance-specific thing. I think I would probably feel that maybe banks also should be part of this overall ecosystem, because now that we have more and more products which are probably span. I mean, I think in IFSC, for instance, I think we are a unified regulator. So we believe there is a great opportunity because now I think, I mean, many of the products span multiple domains, I think. So products which have, I mean, I think, which need to be regulated from an insurance perspective as well as perhaps from a banking perspective, et cetera, et cetera. So therefore, regulations need to be sensitive to such new age financial products that could come to the market. And I'm sure that the actuarial science would enable these products to grow in a very curated way. The other, I mean, obviously, I think I see that you have been having sessions in artificial intelligence, I mean, blockchain, and many other kind, AI and ML, and so on and so forth. So this is something which I think which nobody can miss at this point of time. So the actuaries can play a role in partnering with AI companies to provide more creative and cerebral analysis and help companies optimize profits. There are many ways AI can be applied to finance. For instance, in product development, ML can help in banks and insurance companies to identify gaps in their product offerings and develop products that are better tailored to customers' needs. So similarly, a specific AI technique can be applied in clustering, which is an unsupervised machine learning technique to help identify groups of customers such as millennials or retirees, etc., who may be interested in a specific product or a service. It can be used to help in developing specific marketing campaigns, etc. So in claims processing as well, I think AI techniques could be used to automate the workflow, making it faster and more efficient. Actuaries can help develop models to predict the expected payout for different claim types and enable smoother decision making. For example, a neural network can analyze historical data to identify patterns of fraudulent activity and flag suspicious transactions in real time. A random forest can be used to predict the likelihood of an insurance claim being fraudulent based on combination of factors such as claimant's age, occupation, etc., etc. So similarly, I think natural language processing capabilities also could be used in underwriting unstructured information, maybe textual information, etc., to develop models. So I think the sky appears to be the limit in terms of use of technology. I mean, I think the more the innovators are at play, I'm sure that I think we will have very interesting products that could come to the market, I think. So, I mean, with this, I'm sure that the IIS course curriculum is therefore very, very important. And I'm sure that this will also enable attracting talent from the other sectors as well, I think. For example, like AI-trained computer engineer could also be an actuarial scientist. So therefore, I think the III could look at roping in students from various kinds of disciplines to enable the actuarial scientists to provide a more rounded kind of, services, I think, as time passes, as we have seen in the case of climate. I will end by saying that coming back to GIFT IFSCA at Gandhinagar, which has created a global platform which enjoys a global tax and policy environment. Now, there is a possibility of providing actuarial services, global actuarial services out of GIFT City in a tax-efficient manner. So we have a tax advantage in being tax-exempt. So therefore, I think some of you who are game could actually set up a tax actuarial service company out of GIFT City and probably run a global operation out of GIFT City. We have India is home to a very strong pool of highly talented people, and with thousands of actuarial scientists who alongside other scientists from other domains could provide these variegated and specialized services, could well provide the new age actuarial services that are required. We have cost advantages in India, which probably is 1/5 of Singapore or Hong Kong, for that matter, both in terms of human resources or real estate, for that matter. Technological innovation is happening at a great speed in India, and I'm sure that this can be harnessed for providing some of these services. The startups working alongside actuarial scientists could well be could provide a new age kind of technology products in the market. We in IFSCA are very open to tweaking our regulations to support such kind of innovation. So our regulations have always been learning from the process that has been happening. For instance, like tokenization, which is a new area of in the capital markets. We have set up a group now. Similarly, I think we are setting up groups to. We have a fintech practice where I think InsurTech is a very important agenda. I think over the last several weeks, our teams have been in touch with some of the InsurTech companies and looking at how we could launch some of these global products out of GIFT City. So similarly, I think I would say that the opportunities in India are endless. I'm sure that with India presenting the second largest global market we therefore have tremendous amount of growth happening both in the domestic area as well as in terms of global facing business. So I would welcome all of you to come to GIFT City. I would also thank Mr. Arunachalam and his team for having given this opportunity. This is an exciting time for all of you to be launching a business in India, and look forward to as part of IFSCA to facilitate some of your activities in GIFT City. Thank you very much, and Jai Hind.
Sir, can I request you to be on stage? So please. And I can request our ED, Tushar, to please give us a small